You're tuned in to Agriculture Today, and we start our Friday show with a grain market update from K-State grain economist Dan O'Brien. Dan, thanks for joining us today.
Thank you, Shelby.
Dan, as we're talking about the grain market, starting with taking a big picture view at the grain market, and what are you seeing?
Well, I think the old saying that it's good to recognize that the times, what the times are that we're in, and for us right now to recognize the seasonal factors that we're dealing with, which is that again we don't have any field work going on really in much of the U.S., perhaps some down to the south. Our own planting here in the Western Corn Belt and really the Upper Midwest. Again, all the planting activities are all in front of us. We're heading towards the end of March. In a few weeks, we'll be into April, a week or two, and the further we get into that, the more we'll have field work going on. The more news we'll have of planting progress, of the success or not of an emergence of crops. We'll pay all that much more attention to actual weather, et cetera. So when I look at where we're at this week, compare it to a week ago, well, pardon me, a month ago, prices are down 30, 40 cents or more at each point. Of course, at that time, we had other concerns. We were really, really worried about what was happening in South America at that moment. At this time, we're not so much, even though there's still questions about where that's all going. So we're in the season right now where we don't yet have the crop risk and uncertainty upon us here in the United States that's likely to come. So I think we recognize that, and because of that, you see where the futures prices are. The current May, well, for yesterday, pardon me, 469 as a for the May contract. Dees harvest for corn, excuse me, 453. And anymore, when we don't know exactly what to do with prices, well, it's around 450 and maybe a few cents. So that's about where we're at. And then for soybeans, lead contract $10.13. We've just been bouncing around $10 to 10.25 for a while now. New crop November just about the same, hanging around. Well, closed yesterday at $10.10 and a quarter. Not much happening there. And then for wheat, for hard red winter wheat, May 586 and a half, and July new crop. Again, Kansas hard red winter wheat traded on the CME at 601. And then not a lot happening thereafter. The carries at this point in time, not a lot of movement. I would say on the hard red winter wheat contract, we do have some prolific carries, I guess, of seven and a quarter, 7.5 cents, 6 3/4, all the way from the post-harvest July out to September to December. Most of our farmers probably aren't going to grab onto that because they're waiting to see what they actually have coming out of the field yet. So it's the same situation. But the commercials probably are looking at that, no doubt. So a lot going on there. And on the cash prices, as we mentioned, down about 20, 30, 40 cents from there. You still continue to notice at this moment in time, pretty weak basis here in Southwest Kansas, 5 over in the Garden City area for corn, and every place else, 20. The best bids are 25 to 35, 25 to 35 under. This the idea that we had coming through the winter months and on feed grain markets anyway, that there weren't that many opportunities out there for sales because what we had sold had been sold pretty quickly last fall. So I think we're seeing that play out right now, and until the seasonal factors come into play, it doesn't seem that there's a lot of impetus for buyers at this point in time to come in and buy grain. Now we'll see where that's at once we get out to June, July, and August, but that's where we're at right now. Sorghum, really the only cash bid for sorghum that's over $4 is in the Topeka area. A lot of 389s, 394s thereabouts. Soybeans, all the best bids about 953 or so, and that's again also in the Topeka area, 943s in Hutchinson and Salina. Weaker elsewhere. New crop bids about 955, And then for cash wheat, best bids 556, pretty uniform. Salina, Topeka, Hutchinson, again, the top bids, new crop bids that are just a little bit higher. So not a lot of excitement right now in the grain markets. Again, we're kind of waiting for something to happen, and those signals are just around the corner. I would say again, we talked about what are we looking for in the near future that could move the markets. We still have on March 31st a couple of USDA reports that are quite important. The prospective plantings report, which would give us more information as to whether what the USDA said at their Outlook conference about 94 million acres of corn and 84 million acres of soybeans, corn being up, beans being down, whether that comes to fruition or not. And what's subtly important for the supply demand balance sheets, for the old crop balance sheets, will be the stocks reports. Is that we'll take those stocks report figures, we'll back calculate how much actual usage we had each quarter, and particularly for corn, for sorghum, and for wheat. That'll give us a better idea of how much feeding of those grains is going on. So we'll have that information then, and then we'll come out of that and be looking at the upcoming April 10th WASDE report. So that probably will pivot based on the stocks reports, and the market will be looking at the planted acres, and the USDA will reissue their projections with the March 31st numbers on the in the May 10th WASDE report. That'll come out on May the 12th, and so that's the type of info we're dealing with right now. Again, March 31st, next USDA data coming in, and after that, then planters aren't soon to start rolling thereafter, and we'll see where weather and planning progress take us. And at that time, it'll be just as important what the climatologists say as it is the economists, because we'll all be watching the weather at that time and seeing where the markets go.
And when we're talking about the weather, are you really looking at just what's happening in the US or really around the globe?
Oh, it's an around the globe issue, particularly in the major exporting countries. Of course, we're laser focused on South America, and I understand the daily reports we get out of there. I look at the weather maps; they show a lot of dryness, and some conditions that aren't necessarily that great. But yet, I think that the international grain markets pay attention as they well should myopically to what's the latest bit of weather, and that weather so far has been friendly to crops in Brazil, even with some earlier damage and challenges. Argentina not doing too bad right now, but I guess we won't know exactly how all of that works out, particularly second crop corn in Brazil, the safrinha crop, which is our main export competitor, until a month or so down the road. So we'll see where it all goes.
Any concerns, positives you're seeing in the grain market right now, Dan?
Uh, for positive concerns, I think uh, that we're still. I guess my positive concerns are that I think that the USDA is a very strong, very optimistic, maybe a very optimistic set of yield assumptions in their projections going forward. Again, they projected the corn yields for this year at 181 bushels an acre. The record we had last year 179.3, and we thought we had 183 or 182. Ratchet it back down. So I think that's a very optimistic yield. We'll see whether we hit that. In fact, in the analysis this week, if people go on Ag Manager to look at it, I've looked at the possibility, how the corn market would be impacted if we don't get that 181, but something more along the lines of about 178, 175, or 172. And my own thoughts, there's about a 30% chance of us getting that 181, and probably more like a 40% chance of getting 178, 25% chance of 175, and drought scenario, tough scenario, about a 5% chance. But that's kind of where we're at right now. And the other would be that really a similar point of view on soybeans. Again, the USDA projected 52.5 bushels an acre in their in their Outlook conference. That seems pretty optimistic. Again, we haven't been much over 51 before, but when you plug those numbers into these supply demand balance sheets, they end up, because of strong supplies, uh, having giving us pretty high ending stocks, lower price projections, and then we'll see. Right now, you look at where new crop futures are for corn heading out into the 25, 26 marketing years. That starts September 1. There's at least futures to me look like they're projecting at even money basis about $4.60, and the USDA at coming out of their ag outlook conference, they projected $4.20. So there's about a 30, 40 cent difference of opinion in terms of where the markets are going. And uh, so I guess that my own thought would be that the riskiness of the outcomes yet aren't really dealt with, and I'm a little bit, I'm pretty hesitant to just write down those record high yields until we actually plant the crops and get through the growing season, and see where we're at in the fall.
Dan, I appreciate you taking the time to join us today and give us our grain market outlook.
Thank you very much, Shelby.
That was K-State grain economist Dan O'Brien. We're cutting to a short break now on agriculture today, but stick around because we have more for you up ahead.